Wow, 2025 was a pretty wild ride for the markets, wasn't it? And as we look back, there was one asset that didn't just do well. I mean, it absolutely took off. So, I've got a question for you. If you had to guess, what do you think was the single best performing major asset out there? Stocks? Bonds? Maybe crypto? Well, let's just cut to the chase and look at the number. Get ready for this, a 146% gain. Yeah, you heard that right. That kind of performance just left everything else, stocks, bonds, you name it, completely in the dust. So, what was the asset behind this incredible run? Silver. That's right, silver. It was the undisputed champion of 2025, no question about it. So, the big question on everyone's mind is why? What on earth were the forces that propelled this ancient metal to these crazy new heights? And maybe more importantly, what does this all mean for 2026? All right, let's dive in and break it all down. Okay, so the first piece of the puzzle, and really the most fundamental one, comes down to a really simple but powerful imbalance. We are consistently using way more silver than we can actually dig out of the ground. And in market speak, that's what we call a structural deficit. And to put that in plain English, for 5 straight years now, the demand from everyone, we're talking industry, investors, jewelers, the whole shebang, has been way higher than what miners across the globe can pull from the earth. It's not a one-off thing. It's a chronic, year-after-year shortfall. And this chart here, it shows you exactly what's going on. That bigger bar, that's how much silver we want every year. The smaller bar, that's what we're actually producing. You see that gap between them? That's the deficit we're talking about. And every single year, that gap has to be filled somehow, which brings us to a really crucial point. And that is that the market is basically raiding its own savings account. We're talking about the existing above-ground stockpiles of silver bullion that are sitting in vaults all over the world. And you can guess what happens next, right? As those stockpiles just get smaller and smaller, the people who own what's left get a lot less eager to sell it. Unless, of course, the price goes way, way up. That is the core engine that's been driving this rally. All right, but this supply squeeze isn't just happening in a vacuum. There's another huge factor at play here. A new and very powerful type of buyer has stepped into the ring. We're talking national governments. And just look at the pattern that emerged here. The US came out and officially called silver a critical mineral. I mean, think about it. It's essential for everything from electronics and solar panels to military gear. Then you have Russia's central bank confirming it's buying it up. And on top of that, China started tightening its grip, trying to keep more of its own silver production at home. So you've got 3 huge players making 3 different moves, but they're all sending the exact same message. Silver is now a strategic asset. And this quote really just nails it. We're not talking about just another hedge fund manager buying some silver here. No. When massive countries with big geopolitical ambitions decide they absolutely need to get their hands on the physical supply in a market that's already short on that supply, well, that's a whole different ballgame. It is a genuine game changer. So this intense demand for physical silver isn't just some theory, It's actually showing up in the nitty-gritty, in the plumbing of the market itself. We're starting to see some technical signals that are basically flashing bright red warning lights about just how stressed the supply really is. Now, the biggest signal is something called backwardation. I know it sounds like a super complicated technical term, but the idea behind it is actually simple. It's basically the market screaming at the top of its lungs that it needs the physical commodity, the actual metal, right now, not a month from now. Okay, so let's make this crystal clear. In a normal market, you'd say, hey, I'll pay you $26 for silver to be delivered next month. Simple enough. But in backwardation, the market says, forget next month. I will pay you $28 for that same silver if I can have it right now. People are so desperate for immediate delivery that they're willing to pay a premium for it today. It's literally the market screaming, I need it now. And here's the real kicker. The level of backwardation we saw in late 2025, it was the most intense it's been since 1980. Now, for anyone who follows these markets, that year should set off all kinds of alarm bells. Why? Because 1980 was the absolute peak of the last legendary silver bull market. This isn't just a data point. It's a powerful echo of history. And it's not just that. We're also seeing stress in these weird price gaps between different parts of the world. So when silver in Shanghai is suddenly trading for dollars more per ounce than it is in New York, what does that tell you? It tells you the physical metal isn't flowing smoothly around the globe. It's yet another symptom of a very, very tight physical market. Okay, so let's recap the recipe so far. We've got a massive supply deficit, we've got governments jumping in to buy, and we have the market itself sending out warning flares. The final ingredient, the one that really lit the fuse in late 2025, was a huge pivot from the world of monetary policy. You see, for almost 3 years, the Federal Reserve was tightening its belt, raising rates, and that acted like a strong headwind pushing against assets like silver. But then, on December 1st, bam, that all stopped. And now, when we look ahead into 2026, all the talk is about rate cuts. That completely flips the script. The headwind is gone, and in its place, we've got a powerful tailwind pushing silver forward. And the reason why is actually pretty simple. When interest rates go down, it becomes a lot cheaper to hold onto something like silver, which doesn't pay you any interest. The opportunity cost of not having your money in a savings account gets smaller. And suddenly, holding real, scarce stuff, things that can't just be created with a few keystrokes on a computer, becomes a whole lot more attractive. All right, so let's put all these pieces together. Let's lay it all out on the table and really see what the picture looks like for the year ahead. So here's the thing you absolutely have to get. None of this is happening in a vacuum. These factors are all feeding off of each other. They're compounding. You've got this chronic supply deficit that collides with new, massive demand from governments, all while the market is screaming that it's super tight, and the Fed just shifted gears to a policy that's great for scarce assets. You put all that together, it's an incredibly potent combination. And all of this leaves us with a really fascinating question as we head into 2026. When you have this intense physical scarcity slamming right into the strategic interests of the world's most powerful nations, you have to wonder, is silver's role in the world changing? Is it becoming something more than just a precious metal? Is it turning into a critical strategic resource right up there with oil or silicon? That, I think, might just be the defining question for this market in the year to come.